Today, folks, I'm revealing to you a $15,000 swing trade bet that I'm placing on one oil stock. This isn't a pure oil producer, but will indirectly be affected by what is currently going on in the Western oil environment. I'm going to be breaking all of that down in this video, revealing the position I'm making, so you guys can obviously follow me and see what goes on, whether I make money or lose money doing this. But if this is a conversation that interests you in return, I simply ask that you hit that like button. And before I reveal the position, I want to talk about the current oil market, where I'm coming up with my current thesis. And if you guys want to follow my trades, talk to me directly, come on over to thechartmaster.com. You can buy this little product here for $29.99. Talk to me directly on WhatsApp when I'm doing this stuff, my thoughts, and we can interact, while also getting all of our spreadsheets to track your risk tolerance in your general portfolio. But first and foremost, guys, the big news is that Biden blocks Russian oil imports in the latest sanctions that came out. So how bad is this going to affect the US economy? That's the first thing we have to ask ourselves here, because this is what's driving a lot of the oil volatility. But the United States imported about 672,000 barrels per day of Russian crude and refined products last year, and it's a mix between the refined products and the direct crude barrels. But let's just talk about this real quick and how much oil that is actually related to in the scale of the US oil consumption, because based on this, and take this with a grain of salt, don't know how accurate this is, but in 2020 the United States consumed an average of 18.19 million barrels of petroleum per day, which is about 6.6 billion barrels of petroleum over the year. So kind of taking that into perspective here, folks, basically about 0.5 out of every 20 barrels that are used in the US were coming from Russia. So it's not the greatest or largest impact, but it is going to be enough to cause people to start shuffling around, because even Elon Musk was tweeting that we need oil production now. And it's going to be neat to see whether Biden actually loosens the red tape surrounding fracking and the current oil production in the US, or whether they lean more heavily on Canada, which is basically one of the top 3 largest oil producers in the world, from my understanding. So let's just take this a little bit step farther and talk about the past versus where we sit today, because currently oil has pulled back to about $112 for the crude oil barrel price on the WTI here, guys. And I'm still speculating that this isn't done yet. I think we're going to be going higher from here, but I don't bet on what the oil price is going to do. Never have, never will, never been a fan of oil stocks. But let's go back to the 1980s, because it is a very similar circumstance. During the 1980s, guys, there was an Iranian war going on, leading to a craze in the oil production and consumption. It's a very scary time during inflation, right? Because it was one of the defining factors that led us into a recession. Well, during this time, the government was printing lots of money, and it's just very reminiscent of what's going on today with the geopolitical environment. But we can see that basically from 1979, during the Iranian war and the crisis that was going on, oil ran up pretty drastically. It over doubled in price, right? But it didn't just reside overnight. And I think a lot of people that are making bets on oil right now are getting too giddy, and I wouldn't place them as long-term bets, because this is a cyclical game. What goes up inevitably comes down. But we have to remember that we are in the first to second inning of what I think is going to happen here, because even in the 1980s, guys, it literally took 2 years for the oil price to kind of come back down to a reasonable range. So again, think about what's going on now. I wouldn't be shorting oil stocks. I mean, this is just the first couple innings here, guys. We got a ways to go yet for this full thesis to play out. But let's just talk about Warren Buffett, because they basically have been making a huge stake in Occidental Petroleum. They got a $5 billion investment here, guys, and they've been really loading up over the last 2 weeks from apparently these articles. So it's really neat to see that Berkshire has been really diving into the oil market. And there's a lot of drama around this, because Carl Icahn, a famous billion-dollar investor, has been selling out of Occidental right as Warren Buffett has been buying. And right now, guys, you could have bought this anytime within the last couple weeks here, and you've done very well, because basically since oil took off and Buffett's been buying, I mean, this thing's up 45% just in the last 2 weeks, and it still looks like it's trending higher. Let's just take a look at the 5-day here, because we can see that it's still holding up toward those highs. But historically, as we know, oil, guys, very volatile. These things haven't even come close to their all-time highs that we saw back in the early 2010, 2015 time frame. But moving forward, what bet did I make here, guys, and why am I placing a bet? Is this risky? What am I doing? Let me break this down, because I bought Enbridge stock. Now, this is a company that I've never been that big of a fan of, but let's break this down piece by piece. This is a $115 billion company, and it pays a 6% dividend yield, and is currently trading at a PE of 19, which historically for this company is reasonable, and if I would dare say still lower from a historical average. The last 6 months, this thing's trading up 12%. The year to date, about 14%. So this isn't like these other oil companies. It's not shooting up 50%. It's nothing that is a pure oil play. So it's not going to do these crazy moon shoots, especially at the current market market cap scope, but it's important to recognize right now that Enbridge is Canada's third largest company. This is a massive conglomerate that could very likely take the place of Canada's largest company after Shopify was the largest company. And then since the sell-off, it's basically the 10th largest company in Canada now. So it's neat to see that oil is now, or this kind of Enbridge oil pipeline-based company is competing with the banks currently for the largest market cap in Canada. So let's talk about this pipeline and why that I want this kind of third-party exposure to the oil market. I don't know what oil is going to do. I don't know whether the price goes up or down. I don't know how that's going to benefit from fracking or the other oil U.S. companies that are going to basically be digging up as much oil as they can to feed the need of the market to bring oil prices down. But what I am sure of is they're going to use these pipelines. Enbridge is the largest pipeline company in North America with Canada and the U.S. There is no larger pipeline company, and their pipelines spread all the way basically from Alberta all the way down to Texas here, and they are involved with everything from basically liquid pipelines, natural gas transmission, natural gas gathering pipelines. They do storage, gas processing plants. So this company is just kind of a proponent to moving production and just creating of gasoline and oil products. So I feel like you're kind of mitigating a lot of the risk, and along with the volatility risk, right? Because even if Enbridge drops, I mean, how much is it really going to drop at 20, 30%? And that's in the worst of environments. And honestly, guys, we're not even past near all-time highs in the last 5 years. So I still think this thing has some decent room to upside. I'm going to tell you what I'm doing with this play in a second, but let's just talk about some of the, future forward-looking information here, because they're advancing crude export strategy. I mean, they're continuing to build on even the renewable side of their portfolio with solar. They're getting more into storage because they have storage contracts going on right now. And they got so much going on, about $2.5 billion in the organic infrastructure growth potential. And even more on top of that, guys, they're continuing to advance their LNG export strategy, continuing to build out pipelines, getting really involved in the LNG and RNG sector, which obviously natural gas is a huge proponent to the future right now, and it's what a lot of countries lean into. So you're kind of getting the best of both worlds here with a little hint of renewables right now. Like I said, I've never been a fan of oil, don't like gas. I feel like this thing that's paying a 6% dividend yield is just a good place for me to currently park a mild amount of capital, because I'm sitting on so much cash and my corporate taxes do not come due until May. That gives me a couple months here of just trying to think about what I could do with that cash to perhaps make anywhere from a 5 to 15% return. So what I went ahead and did is I bought 268 shares of Enbridge. It's worth about $15,125 on this morning's dip. Now I am trading up slightly from there, and what I might do is set a stop loss, because I'm probably going to have to use a little bit of this capital to pay taxes, probably not a huge incremental amount of it. But in the meantime, I can maybe collect 1/4 of a dividend if I plan on holding it that long. But as I mentioned, I feel like we're in such early innings for this that we're going to have to watch this unfold over the next couple months while all these companies scramble to make up for the supply and demand. And I feel like Enbridge is going to get a big benefit from this, having to ship and move the oil around, depending on whether Biden decides to lead more into Canadian oil. I'm not sure. All I am sure of, guys, is I feel like there's still more potential upside than downside. But as mentioned, from a risk standpoint, remember, what goes up, what gets hyped will inevitably come down. And I would just be very cautious if you're playing some of these pure play oil companies where you don't really know what you're doing. You haven't really dug into the balance sheet and you're just getting overhyped about it. Like I said, I'm not looking to make huge gains in here. I'm just looking to mitigate some potential downside while perhaps making a quick return and maybe pocketing a couple thousand, which I may even leave in Enbridge. It's a great dividend play, guys. It's been a great dividend growth play here in Canada. It's just an all-around good company to hold. I'd recommend anybody to buy it. So it's one of these things where if it doesn't work out, the downside is definitely limited. Upside is going to be limited because of the scale, the scope of the market cap, and just how they're involved in the oil market. But at the same time, guys, like I said, it just seems like a nice risk mitigated place to be right now for me personally. Don't do what I'm doing. Don't take this as financial advice, but I am going to pass that question off to you. What do you think about this trade? I'm probably going to let it play out probably for the next 2 months. And like I said, if I can get a 5, 10 to 15% return, I would gladly hit the sell button and park most of that back into cash. I am very highly paying attention to the rest of the markets right now. We're seeing a bit of a rebound. A lot of people speculating whether we've hit bottoms here, watching Shopify trade up 10%. Most of the market's up. Bitcoin flying right now. So there's a lot of green. There's nothing to rush into here. I feel like people get fixated on markets that are hype when they should just kind of relax, because if you have a diversified portfolio, you're probably doing pretty well today. But I pass that question off to you. Let me know what you think, but stay cool, stay awesome, and as always, I look forward to catching you in the next one.